Hello and welcome to Business Today Television. India's headline retail inflation number for the month of November has come in at a 11-month low of 5.88%. This is the big breaking news at this point of time. 5.88% on the headline retail inflation, that is the inflation rate that is measured at the level of consumers. You have it there on your chart, and this is a significant decline in terms of the inflation numbers that we are seeing. And joining us live is Rajni Sinha, Chief Economist at CARE. Rajni, your first reactions on inflation, even as IIP has shown a significant slide at -4% for the month of October, but starting with inflation. Hi Rajni, are you able to hear me?
Yes, I can hear you.
Yeah, I was asking you for your first comments about the steep fall in inflation that we have witnessed for the month of November, beg your pardon, at 5.88%.
Yeah, so the fall in inflation is mainly because of food inflation coming lower than expected. And that too, if we go a little deeper, we find that it's vegetable prices which have gone down and which has supported in the food inflation coming down and overall inflation being lower than market expectations. So that's a good development, but the important point here to note is that core inflation still remains high. So core inflation, which was around 6%, which has 6% for the last few months, has remained above 6%. And that is concerning, I would say.
Okay, the numbers that we are seeing, and I'm going to take our viewers through it. The food price index for the month of November is down 0.9% month on month. The combined index is also down. Urban inflation at 5.68% versus 6.50%. Rural inflation at 6.09% versus 6.98%. Food price inflation at 4.67% versus 7.01%, and the headline number, as we just told you, 5.88 versus on a sequential month-on-month basis 6.77%. If core inflation remains sticky, should we be celebrating this latest November print?
We need to remain cautious because core inflation is still high. I would say that overall inflation coming down is still very comforting because food inflation has a strong bearing on household inflationary expectations. And household inflationary expectations, as per RBI survey, is still high. The last data that we have, the household inflationary expectations is around 9.8%, which is quite high. So I feel with food inflation coming down and specifically with vegetable prices inflation coming down so sharply, it should help in containing inflationary expectations, which would overall be good, and it would help eventually, it would help the core inflation also to kind of come down from these levels. But having said that, core inflation has been found to be very sticky, and it would be a challenge to get the core inflation down to more comfortable level.
What do these numbers mean as far as policy making is concerned from here on?
So I think for the policy makers, I think RBI has quite clearly indicated that they are going to go ahead depending on what kind of data points we see going forward. Um, I feel there's still chances of another 25 basis point hike in the next quarter, and I am basing this mainly on the fact that, as I mentioned earlier, the core inflation still remains high. Household inflationary expectations still remain high. So we will, while the food inflation has come down, RBI would also like to wait and watch and see if this is sustained over a longer period of time, and if this also helps in some reduction in core inflation eventually. But the reduction in core inflation because of food inflation going down, all that, that kind of second round impact will take time to happen. So given the situation currently, I would still say there is a chance of another 25 basis point rate hike by RBI in Feb.
How would the RBI also interpret some of the industrial production data? Now, there is some bit of volatility that we see, and the month of October was also the month of Diwali, and therefore, how do you see that number?
So, yes, the industrial production data has come as a big negative surprise. While we were expecting this number to be lower simply because of high base of last year, but we were not expecting this kind of contraction. So that does come as a quite a disappointment. And having said that, I would also like to highlight that even if we look at the last GDP data that we got for the second quarter, even in that, the performance of the manufacturing sector was a big disappointment. And over there, as it was the GVA data that we are talking about, one reason attributed to that was the increase in raw material prices, increase in input cost, which had hit the manufacturing sector, GVA. But now we are looking at the production data, IP production data, and that has also come, much lower than expected. So this is concerning, I would say. Uh, so another factor which we were expecting would start impacting manufacturing sector, but wasn't expecting such a sharp impact, was this lower external demand that we have started witnessing, and which is also getting reflected in contraction in our exports. So lower external demand would also have a bearing on our IIP production. So, yes, the numbers are quite a disappointment.
In terms of inflation, and I'm just skipping back to that in the context of manufacturing production as well, are you now able to say with certainty, if I were to question you on whether inflation has peaked in India, the recent spurt that we saw, has that peaked now, and is therefore inflation being below the RBI comfort level at 5.88% really something that we should say is likely to continue?
So yes, we feel that inflation has uh, around so we were not expecting this sharper fall in inflation in the month of October. So there is a chance that going forward, because it has gone down because of seasonal impact of some of the food items like vegetable prices falling sharply. There are chances of it again, going up going forward, but not in a very sharp way. I would say inflation has broadly peaked, and we should see it moving around 6% or so. Statistically, we may get a little higher number going forward, because if it's because of volatile component, we may see next month that increasing. But broadly, having said that, uh, broadly inflation has peaked, and we are likely to see it moving below 6% in the next few months. But even with that, the concern would remain, because one, because like I mentioned, core inflation is still high. And second, as you would have seen, RBI governor in the last meeting was talking about the mid level of the range of 2 to 6%. So RBI is now looking at us eventually moving to around 4% level of inflation. And that is going to be quite challenging if core inflation remains sticky around these levels. So, as per our estimates, we do not see it touching 4%, inflation touching 4% even in FY24. So if I look at whole of FY24 also, we are expecting inflation, average inflation in the range of 5 to 5.5%. So to achieve RBI's target of 4% inflation would still be a challenge, but getting it below 6%, we are there, I would say.
Okay, since we are there, therefore, the possibility, from what I notice you said, of just a 25 basis points hike, that's a matter of debate. Let's quickly turn our attention to what this means for growth. We've already seen the growth impetus taper off a bit. If we were to just take the IIP data and try and visualize on the basis of that, Do you see an impact on growth also coming through in the current quarter as and when that data is reported?
So, overall growth, we are expecting it to the overall, we expect the momentum to improve in the third quarter from the second quarter. And this, we were mainly basing it on expectation of, services sector doing very well. A lot of rebound there in a lot of segments, which we saw in the second quarter also in segments like travel, tourism, hospitality sector. So that segment we expect it to record good growth and good boost coming from overall services sector. Manufacturing sector also going forward, there are two things that are going to play. One, the commodity prices have come down in the last few months. So while the second quarter data, the manufacturing GVA had not fully captured the fall in commodity prices, the raw material prices. But in the third quarter, we will see the impact of that, the positive impact of that on the manufacturing sector. So that would be a positive for the manufacturing sector. But the big negative would be this reduction in external demand that we are expecting going forward. So on a net basis, I would say there would be an improvement in manufacturing sector simply because of the input prices coming down in the coming months. But yes, the big challenge would be the reduction in global demand, the external demand. As far as domestic demand scenario is concerned, I see that improving moderately in the coming quarter.
Okay. One point about the likely impact of another US Fed rate hike. It's being penciled in mostly at 50 basis points, and this would obviously be the last, at least in the current calendar year. But there are signs that globally also the worst of inflation seems to be behind us. Does that augur well for imported inflation, particularly in the Indian context?
So yes, I completely agree with you. That's another big positive that will be playing out in the market. But having said that, we have to take into consideration that overall, while inflation has peaked globally, now the focus will move to core inflation, and core inflation is a problem not just in India but globally. And core inflation is going to be sticky not just in India but globally. So while the central banks are expected to moderate rate hikes going forward because overall inflation seems to have peaked and is showing some signs of moderating, but at the same time they are not. Uh, there are some more hikes in the offing because they would be concerned about core inflation. And specifically, if you look at what's happening globally, they have a big gap to still fill. So there the inflation is still much higher than their 2% inflation target. So with inflation at around 7 to 8%, and from some of the economies even higher at 8 to 10% or so, they I think that there's still more rate hikes in the offing globally. But having said that, the RBI governor has clearly said that as far as the rate hikes in India is concerned, they will be looking at the domestic factors, the domestic inflationary scenario. But yes, like you mentioned, the currency movement, the impact of what the global central banks do, and the impact of that on currency will also have an impact on inflation. So some comfort on that front is coming in the next few months.
Okay, I think that's a good point to end this conversation on. Some comfort. The headline numbers suggesting that inflation is fallen sharply to almost a 1-year low, and that's below the Reserve Bank's upper end. That is also good. But like Rajni was pointing out, core inflation remains sticky, and that is the really difficult part. Now, it will be up to the monetary authority and the fiscal authority for action in the next quarter, the budget and the monetary policy action afterwards, which will tell us which way is the course of money and its cost going to go in India. Rajni Sinha, thank you very much for your time with us today. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Till then, goodbye.
तो भारतीय